Hello and welcome to Property Money Trees Maximising Property Values, the once a month show where I break down the steps of how to recognise, enhance, and then extract the values in property in order to create wealth. Would you like to find out how you can benefit from the steps of maximising property values? This is even if you don't own a property yet or have a deposit. If that's a yes, then you're in the right place to find out. My name is Patricia Faber, and although many know me for my work as a solicitor, on this show you will be getting the benefit of my 30 plus years worth of experience of maximising property values, experience which has given me a net worth in millions. So who might benefit from listening to this show? Literally anyone with an interest in creating property wealth. Welcome back. I thought I would talk about some of the tax aspects, so not advice, never advice, of us actually owning property, including using alphabet shares in companies. And that is for, I suppose, people who don't necessarily need the income that they're generating from those particular companies. And it's very, very complicated. It's way past my pay grade, but it's a conversation starter. It's something for us to be able to think about and to perhaps implement if we think it's going to be something that can actually benefit our businesses. Okay, let me start from the very, very beginning as I understand it. Like I said, not advice, just things for us to think about, and then perhaps go to our professional advisors to get them to properly advise us, and then to maybe put something in place if that is what they think is going to be best for us. So for people who are still paying, who still own under their own names, there is a tax. Well, depends on one's circumstances, but if you have a partner or a spouse and you're a higher rate owner, you can actually transfer the beneficial interest in the property to a lower earning spouse. So if you're paying tax at 40% and your spouse is paying tax at 20% or 0%, you can transfer the beneficial interest in a property to them, and then the rents from that property will be received by them and will be taxed at their own rate. So if they're paying tax at 0% or 20%, then you'd be able to get the interest on that property as tax deductible. So that is one thing to bear in mind, but that's really if somebody is still, if they still hold properties in their own name and they are a higher rate taxpayer. So that's one thing. The other thing as well is if again somebody is if they own property in their own name and they're a higher rate taxpayer, just a higher rate taxpayer, it's worth actually making extra pension contributions. I thought I'd start this. I thought I'd start off the year talking about tax, not advising about tax, but just dropping ideas down so that we can then go and talk to our tax advisors. And if it's relevant, then we can put things in place. Yeah, so we can then, if we're just over the threshold of being a higher rate taxpayer, we can then make pension contributions, which will then increase our tax band and drop us back down to 20% or whatever percentage it is that we are looking for. It would be 20% in these circumstances. So that again is something that maybe people might want to consider. Then we all know about, if we're buying, maybe we buy using a special purpose vehicle company, because at the moment, tax wise, it still looks like it's winning at whatever your tax rate is, and definitely winning if you're a 40% taxpayer. Then what I wanted to really kind of like just get people thinking about is, if we're already buying and holding in companies, is the structure actually most tax efficient? What do we want to do with our properties? Are we thinking that we're going to actually sell them and then live off whatever gains we might have made? Are we thinking of legacy? Is it something that we want to leave to either our children, other family members, or whomsoever? If we are thinking legacy, then it's worth thinking about the structure of the companies that we actually are holding, because family investment companies, and they're the ones where you might have heard of people talking about alphabet shares. Again, if you've just joined us, this is not advice. This is just me starting the conversation and getting us all to think about it. So these were things that I was thinking about over the Christmas break, and I thought I need to share this with my people, which is why I'm doing it now. So the way that uh, I'll call these types of companies FICs, so family investment companies, and they're mainly for legacy. Um, so for instance, I have a flat in a block where um, the guy who's maybe kind of like the owner, I see him as the owner. He's younger than me, but the company that owns the freehold is way older than me. So that's an example of an FIC. So the company was formed before this particular guy that I now see as the owner, before he was born, but he now runs that company. So that is where FICs are actually very, very good. But in terms of alphabet shares, the way that they tend to work, as I understand it, like I said, it's not advice, it's just a conversation starter. Let everyone go do their research, and then make up their own minds. Is you have different levels of shares. So you can have A shares, B shares, C shares, D shares, whatever. That's why they call them alphabet shares. Um, and they don't have to be A, B, and C. Well, but that would be down to the person who's actually drafting it for you. They could be 1, 2, and 3. They could be voting, dividend, capital, whatever you decide. But it's easier to call them A, B, and C. So if you have those kind of shares, what you do is the A shares, they control the voting rights. So you, as the owner, would retain the A shares. You would have A shares. So you would always have control over the company. Now, in terms of the income, so again, this might only work for people who don't need the income from these particular companies. Then the income would be attached to B shares. Now, again, it doesn't mean that all of the income has to go to other people. You could have all the income going into the B shares, and you could still be a B share owner. So, like I said, this is just for us to kind of like start thinking about these kind of things. Um, but it's neater if all the B shares go to a particular sector. But let's say they don't, it doesn't matter. So all the income then goes to the B shares. If they, or the B shareholders, if the if these B shareholders are your children stroke family, then you are not taxed when they receive the rental income. One thing that I would say, which I picked up when I was doing my research, is that if you have children who are under the age of 18, you don't this is not going to be tax efficient for you to then give them B shares, because the minute they earn dividends that is more than £100, that income is treated as yours, so then there's no tax advantage. But if you have children who are older than 18, you can make them shareholders, B shareholders. Even if you've got children younger than 18, you can create a discretionary trust for them and then the shares will then go to them once they turn 18. So there are so many things here, and that is why we need to really get proper professional advice. Um, so the income goes to the B shareholders, which is absolutely great. And the way this is drafted, the way your articles of association are drafted, allows for this to happen. So even if you've got a company now and you think you might want to do this, all you'd have to do would be to change the articles of association and then register them with Companies House. And then you can start from whenever you actually do that, if you decide that is the way forward for you. So, what then happens is once you've done that, you literally, the way that the articles are drafted, you're effectively giving the benefit of the company to the B shareholders, possibly even the C shareholders, depending on how you want it done. So that means that
I hear you've
any
moved
growth
country.
in the company, so any
I'm
increase in
just
value
doing lots of
in
Oh,
that
travelling
particular,
and
and this lady has just joined us.
enjoying
Pam,
the
why don't
fruits
you,
of my
can you
labour. So
come
I'm
up
in
and talk
different
to us?
countries.
Because
I'm currently in
I know
Thailand. I
that
was
you
in
are aware
Dubai.
of this.
I'll be heading back
So
to
Anthony
Dubai,
is
then heading back
saying
to the
also
UK.
good to
But I'm doing a lot
mention
of the things that you're
contributions from a
talking about.
limited company
As we
to
get
reduce
older,
corporation tax. Please, guys,
we get a
come up
little
and
bit
talk to us
wiser.
about this, because, like I
We
said,
pay,
I
we
this is just a
invest more
conversation starter.
in the
I'm going
professional
to invite
services to
you
understand
both
how we
to
can
please
leave a
come up
legacy
and
or to hand the baton to
talk
the
to
next
us, because I think
generation
it's really,
without
really
Rachel
important now.
thieves
And apart from
stealing what
anything
we've worked so
else,
hard for,
now that
all the
we're
time,
going
effort, and energy
thank
sacrifices that
you,
we've made,
Anthony.
risks
Good
that we've
morning.
taken for the government to want to
Renters'
take it.
rights
I'm not of that
era.
ilk,
We need
and
to be
every single
looking at how
person
we're
has a moral
protecting
and
our
legal
income, our assets, our
obligation to make
hard
sure they
work,
pay the
our
least
life
amount of
earnings.
tax that they have
Anthony,
to.
please unmute.
Good morning, Patricia. It's been a while. I hope you're well.
Do you know,
yes, it has been. It's been
absolutely,
ages.
absolutely. Because the thing is,
I'm
do you know,
well, and then I'm not well, and then I'm well again, and then I'm not well. But right
Can,
now I'm well.
can you make
Thank
up your mind, please? Uh, it's good. I'm not going to say I'm an expert in this. Like you're saying, this is not advice, etc. And I think it's an interesting subject. What I would say to people is, you need to, as you will be aware, don't plan tomorrow. You need to plan today, because you end up doing things, like buying a property in your personal name, and maybe it should have been in a company name, and to undo it is complicated, expensive, and time consuming. So it's thinking about where the end is that you want, and hoping you've chosen the right things. As an accountant once said to me, he said, "I spend a lot of people spend a lot of money with me putting trusts in place." He said they spend even more money with me unraveling those trusts, because their life changes at some point.
do you know, you're absolutely correct, Anthony. And I wasn't actually going to say that and say do it today, but we have to start planning today, like you said, not for tomorrow, but today, and start to do things today. Do you know? I remember being in school, and the first time my headmistress said this, I was shocked. I went away and I was thinking about it all day long, and then she kept on saying it, and it lost its meaning. But it was true then as it is today. Today is the first day of the rest of our lives. How do we want to live the rest of our lives? Today is the day that we should be deciding that and implementing it. So that is exactly what we're talking about today. So these alphabet shares, if we have it structured properly and correctly, say we buy a property today for, let's say, and it's worth, let's say, for easy assimilation, I'm not good with figures, let's say it's £100,000, it's worth £100,000 today, and we have this kind of structure in place, and it's effective, an effective structure, not a DIY thing that that Anthony alluded to. People people don't do things properly, and then it costs so much more to put things right. So a proper effective structure, and then you as the buyer, well, not the buyer, but the instigator of the purchase of that property, you pass away, and the property is now worth £300,000. Now, normally, if your what do they call it, your estate is worth more than, I think it's £325,000. It's not a large amount of money. Inheritance tax actually kicks in. So let's say this particular property is above that threshold. Your beneficiaries, if they are the B shareholders, won't have to pay inheritance tax on that capital gain, on the increase in the value of those shares. So it's so worth thinking about. It's not just about the income today, it can also help with inheritance tax tomorrow. It really, really is so important. Do you know, we've got somebody, does anybody else kind of like know about these shares, and can they actually talk about it from experience? Because it would be great if you do, and you can come up and share your experience. In this room, we're very, very generous. We share our experiences, and we share the things that we're talking about. Because today, I'm not talking from experience, I'm talking just based on, I think this is something that we should all be. Oh, lovely. Thank you. Thank you. Thank you so much. And good morning. So Emmanuel, have you actually used these types of like family investment companies, and how did you structure yours? I've just been talking about the general structures where you keep the voting rights in the A shares, you keep the dividends in the B shares, and you could maybe keep the capital in the B shares as well, or you could even have the C shares for the capital. You could do whatever you like as according to how a professional advises you. But if you've done it, how have you done it?
So, just the same way you go to the doctor with an ailment, the doctor's going to take a number of questions first before he can prescribe the right medicine. The same is true for financial advice in your circumstances based on your age, what you have, what you need to set up. So, I'm looking at a number of different structures. So, the A and B, it doesn't have to be A and B shares, it could be A up to Z shares. You can have as many share classes as you actually want to. But then you have to look at what ramifications it has in terms of lending, the criteria, and what you're trying to achieve. And it doesn't necessarily mean that on death that you don't pay any inheritance tax. So the different share classes can have different voting rights, but can also have a different percentage of profit share. So it depends on who you want to have control within the business, what lending, if any, that you have. So a lot of people put these structures in place where they have no lending whatsoever, because it puts in a different layer of complexity. And we know with lenders, when you have shareholding, so say you've got 4 or 5 children and you will give them 5 or 10%, that total collectively causes a problem for lending where they have to be on the application. So another way that you can actually structure it, and you might have 2 or 3 different structures depending on your level of business and complexities and different joint ventures with different people. You could also have a smart company or freezer shares that you can actually put into place. So every person, I say this, you've probably heard me say this 1,000 times over the last 5 years. If you think the cost of good advice is expensive, try the cost of poor advice, bad advice, or even worse, your own advice. So I've probably spent in the last couple of years maybe 40 or 50,000 in terms of legal advice based on my particular scenario, what I want to do. I have different moving parts. As you gather, I'm doing a lot of traveling, and I want to have the flexibility to come and go as I please. I don't necessarily want to be a tax resident in another country, still in the UK. So I'm looking at different ways of how I can mitigate that. And each and every one of us is very different. But when you were talking about people only seeing the results, it's the analogy of the iceberg. You only see the tip of the iceberg. You don't see just how much is under the water and what you have to go through over all of those years to get to the results. People only see the results, and they see that in every area, whether it be financially, spiritually, emotionally, physically. People only see the actual result, and they don't realize just how much work, time, effort, and energy and sacrifice has gone into those things. And I don't speak quite as eloquently as you, and I don't probably say as many words as you do as a lawyer trained to say as many words as possible, charged by the minute, or by the second, or by the word. But but yeah, we all have different things that we need to put in place. Thankfully, my sense of humour is still around.
Thank you, Emmanuel. You are so right. Everyone's circumstances are going to be very, very, very different. But I hope that people can begin to see how having a particular structure might work in certain circumstances. So if those circumstances are yours, then please go get professional advice. Get somebody who knows about these things, who practices in this area, who has professional indemnity insurance. To my mind, that is so important because every we're all human beings, and even the most professional person who's been practicing in an area forever can still make a mistake. They might be facing a crisis at home, something might happen, they might be distracted. If they make the mistake and it costs you, then their professional indemnity insurance will do what it says on the tin. It will indemnify you against their losses, so you won't be out of pocket. It's so important. And again, I've heard Emmanuel say it so many times. If you think good advice is costly, check out the cost of bad advice. And I've not said it the way he says it, but yeah, but that is so true. So if we're shopping around for advice, and say we have, I only really use solicitors, I have to admit, because I know exactly what the professional rules are, what they're supposed to do, what the recourse is if they get it wrong. I understand that inherently, which is why my first port of call would always be to a solicitor, and also accountants, if it's tax. I completely understand that. But other people might think, oh, if I go to a solicitor, they're expensive, they charge by the minute. Like as Emmanuel said, it's not actually quite by the minute, it's by the 6 minute, it's by the unit of 6 minutes. And they're expensive, and they're going to charge VAT and all whatnot. But I know somebody down the pub, or a friend of somebody down the pub, and they are just as good because they say they are, and they don't charge VAT, and they're just going to charge me, I don't know, maybe £1,000 or £2,000 or however much. Um, that £2,000 might be the most expensive mistake you've made. And the thing is, a solicitor might not even charge you that much. But if this person down the pub and their friend has said to you, the solicitors will cost you £10,000, which they may well do. But if they're saying that, and for that reason alone, you decide to go with somebody else who's a lot cheaper, you might be being penny wise and pound foolish. Now, I don't know any solicitors that I can recommend, so this is not what this is about. I'm not being, a salesperson for any particular firm. No. I'm literally just saying this because I think, and I strongly believe, this is something that we all need to be thinking about very, very carefully at the moment, and also to be looking at our structures, because we've never been more vulnerable um, as property people than we are with the renters' rights stuff coming in. You know, who in this room can say that they are completely free of sin? And that's the way that I look at the Renters' Rights Act. People will say, "Oh, you've got nothing to worry about if you do the right thing." But because I've I've worked for the government before. I've worked for law firms, I've worked for accountancy firms, and I know from personal experience that you can make a mistake at any time. Okay, just what I was talking about. Even professionals can make mistakes. So, what about us in property? Do we really think that we will make no mistakes? And it's those mistakes that can cost us dearly. very, very dearly, financially dearly. Up on, well, even now, up to the 1st of May, um, there are certain mistakes that we can make where we'll get a warning letter. And for good landlords, that's all that good landlords actually need, a warning letter. And good landlords will go, they'll sort it out, and the problem will disappear. From 1st of May, you don't get that grace anymore. You make a mistake, no matter how simple it is, no matter how irrelevant it is, you will get, or you could get, a fine. It's no joke. And I am, in fact, a friend of mine was talking about me yesterday. So I'm selling. I'm literally trying to sell my businesses. I'm going into something else this year, and I'm doing lots of other stuff. And I'm just, for the length of time that I've been a landlord since 1986, I'm thinking, there's a time when you might feel too old to be playing a certain game. Anyway, so I'm selling this particular property, but I'm selling the shares in the company that owns that property. So what I did a few years ago, when I stopped practicing as a solicitor, whenever I bought anything, I bought it in its own company. So it's not just buying properties and putting them all in a company. It was buying a property and putting it in a company, and buying another one and putting it in another company. Anyway, so I'm buying the shares in this company. And this friend of mine is actually the person who introduced the buyer to me. And she said to this buyer, apparently, you've got nothing to worry about. She goes, in terms of compliance, nothing to worry about. She said, and if I'll say anything about Patricia, it's not that she would have done less than she was supposed to do, it's that she would have gone over and beyond. And I really, really laughed, because I thought, actually, that's me. I will go the extra mile. Even before EPCCs were a thing, that's what I was aiming for. But I say this because I still am not sure that I would not make any mistakes, that I have not made any mistakes. There are none that I'm aware of. There are no major ones that I've made, but there could be something somewhere. Now, and the people in this room will probably know this, but some people don't and won't. Now, if you've got an HMO, you put your fire doors in. We all know that. You could you could have had the council person come round, and they're happy with what you've done and they give you your license, no problems. But that doesn't mean that you can't get fined regarding that particular HMO. Did the person who came round, did they actually measure the gap between your door, whatever, the frame, and your door? Did they make sure that the gap was less than 4 millimeters? It's not big. If they didn't, and your gap is bigger than that, that could you're non-compliant. So there are so many nuances to all the things that we do that we can't know all of them. Well, I can't. I definitely don't think I can know all. I don't think I know all of them. There may well be people that know all of them. And I mean no disrespect to any lettings agent, but I don't think the lettings agents know all of them either. There are certain people who might know most of them in certain circumstances, and there are other people who will know all of certain other things in other circumstances. We can't know all of it. And the only thing now that we need to bear in mind is that the local authorities are financially motivated to find faults in what we've done. And honestly, if I was working for a local authority, one of the first things I would do is I would start going to all of the HMOs in my local authority, and I'd start measuring the doors and the gaps. It's an easy one. It's something they've never bothered with before, but now there's money on the table for them to take. So we have to be careful, and we have to protect what we've actually built. And if we even if it means that we start to divest ourselves of our interests now, if we can, it's something to think about. I'm not saying we should do it. I haven't done it. It's something I'm thinking about. But like we were saying, somebody once said, and it feels that there might be some truth in it now. I'm not saying it's true, that taxation can be legalized robbery. I don't have anything against tax. We need to pay our taxes. And I pay my taxes, and I pay it, I'd say now, happily. It used to really irritate me when my children were younger, and I used to think to myself, well, what am I actually getting out of the taxes that I pay? But now I feel, yes, the country needs money, and I will pay what is fair. But when I feel targeted, and when I feel that I have to carry a bigger burden than the rest of society, then I'm not happy. But we still have to comply with the law. The law is the law. We cannot break it. But what we can do is we can protect ourselves within the law. And that is what I'd love us to start thinking about. Let me go into the room chat and see what people are saying. Oh, thank you guys. Right, okay, Pam. Okay, fine. Trish, fines are already being issued. No, 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 no. Trish, please come up. Please come up and tell us about this. Because from the 27th of December, the local authorities were given the powers within the Renters' Rights Act. Oh, really? Wow. Valeria, we are dealing with a fire door in a block of flats. The fire inspection has been and they've passed it, but actually that door is not shutting. You're lucky. just get a carpenter in to sort it. Then Valeria says, I asked my letting agent about the changes in the renters' rights, and he replied with a one-liner, we can't have long contracts anymore, or something on those lines. So better not trust the local authority. Wow. Do you know, again, lettings agents are just, they're run by human beings. They are, some of them are very, very good, and some of them not so good. And there's a lot in the Renters' Rights Act. And you know, I've read the Act from start to finish a couple of times, and I can tell you for nothing, there are still bits of it I don't understand. There are still bits of it that will not come to mind. It's a big piece of legislation, so many changes. I don't actually expect for anyone to really know what it contains. If you've written it down, I keep going back to what I've written down to remind myself of what it actually contains. And then that's not the fine print, that's not the fine detail. So there's a lot going on, but we have to take responsibility for our own businesses. We can't rely on letting agents. We can't rely on solicitors. We can't rely on tax advisors. We have to have an overview of what is happening, and we need to appoint the relevant, proper people to actually advise us. And I feel very bad for the government. I think they're being improperly advised. And I don't think the government means any harm. It's just that people with a particular agenda are controlling the narrative, and the government is actually following that. Because I think when the dust actually settles, I honestly suspect that renters will be worse off, as will the Treasury, in terms of the rent it's actually collecting. And so, what is the point of all of that? I honestly don't know, because I think when they're thinking about it, they're just one dimensional, and they're just thinking, in a straight line. they're not thinking about all the other things around it. And it reminds me of the winter fuel allowance, where when Labour came in, they immediately said that certain people wouldn't be entitled to it unless they claimed a state pension. And all of those people who generously did not claim a state pension because they thought, I don't need to claim it, I won't claim it, I'll leave that money in the treasury to be spent on other things, went and claimed it. And so the government was even worse off. It's just stupid thinking, and it's a shame. But that is not our problem. We are not in government. Whatever we can do to help, we should do. I think if we can, and we feel it in our hearts to do, we should. But overall, for our businesses, we should be wise and we should be protecting what we're doing. So, as I said in the beginning, and guys, Anthony and Emmanuel, if you think of anything, please do unmute and interject. But if you're still holding property in your own personal names and you do have a spouse who is maybe at home and they don't necessarily earn, please think about doing a deed of trust to transfer the beneficial interest to them if you trust them. And then that way they can be they can receive the rents in their own name. Chances are, if you have a spouse that doesn't work anyway, you give them money. And it's not just like wives at home. Sometimes you have house husbands. When my children were at school, there were a few house husbands where their wives went out to work and they stayed at home and they looked after the children. So I'm not being sexist, but if you have a spouse at home who doesn't work and doesn't earn, then this is something to really think about. But you can't just say, "Oh, my spouse is receiving this money." No, you have to have a proper deed of trust, and you have to file a particular form with the with HMRC. It's called a Form 17, and once you've done that, the income from that property will be taxed in your spouse's hands. So they are a 0%, a 20% income tax payer. You will then be able to deduct the interest on the loans regarding that particular property. So that is worth thinking about. Another thing that we don't tend to really think about that much is insurance. So it, when I wrote my book, one of the things that I kept saying is, will there be insurance to insure against these particular penalties and fines coming up under the Renters' Rights Act? I don't know that there will be, but there is insurance for other things. So we can insure against, for instance, inheritance tax. Um, it's something worth thinking about, no matter how much it costs. How many people have health insurance? I've spoken to people where they've said, "Oh, I don't have health insurance, it's too expensive." Health insurance doesn't need to be expensive. And how cheap it is only becomes apparent if you don't have it when you need it. It's just like contents insurance. It's just like, please, if I can encourage anyone to do anything this year, it's to look at your insurances. Insurance is so important. It really, really is. So, insurance against inheritance tax is one that I would advise people to look at. Insurance against healthcare is something I would encourage people to really look at. Um, it's a necessity. It really is. They have private health insurance, and they don't even think they're going to be ill. Um, one of my sons last year said, "Oh, Mum, I'm going in for an operation. It was an elective operation," um, and he gave me the dates. So I said, "Oh, no, he hadn't. He didn't have a date at the time. He did was just telling me about it." And I said, "Oh, okay. Um, are you doing this under the NHS? Do you know when you're going to have the op? Because it's elective." He goes, "No, Mum, I'm doing it privately." And I thought, "You're doing it privately?" He goes, yeah, I've got health insurance. And I was so proud of him. It's not something that I would have it's not something that I would have discussed with him before then, to take out private health insurance. Because when you're young and you're fit, you really don't think that you're going to be ill. You really don't think that you're going to need to, health insurance. But he has his health insurance. He uses it for his dental stuff. He uses it. He's of a different generation to myself. So, but I honestly would encourage people to look at health insurance as well as anything. And Valeria's saying now, Valeria says, this is a good agent, but I do not think he has read it. No, he doesn't need to read it, Valeria. Honestly, if you're not a lawyer, I don't think you will ever understand the Renters' Rights Act. And even lawyers struggle with it. I know that I've struggled with it. I know a friend of mine, my friend that I keep on mentioning, who does the independent landlord stuff. We talk a lot about it. We debate what certain clauses mean. And we're both legally trained. I know certain lawyers who've written about the Renters' Rights Act and they've got it wrong. And I'm sure I've written about it and got things wrong. So your lettings agent doesn't need to actually have read it, but they need to have a lawyer or a team who's actually read it and who has understood it and who has advised them as to what to do. That is the duty that your letting agent actually owes to all of the landlords that they are working for.
So isn't it a really sad state of affairs where you have to run a business where of your business is having to have a lawyer on your side? Can you think of any other business that has to have so much regulation that hinders a business from growing and expanding in any other sector in our whole of the UK in terms of businesses, where you have to rely so heavily on outside factors, including agents and lawyers, to be able to run a business effectively and efficiently? And that is why so many people are leaving the private rental sector, because it's not an easy game to be in as it used to be. You can still make money, and if you haven't got money in property, it's one of the few businesses that you can start to make money and generate wealth over a period of time, but not certainly how it used to be.
Anthony and Emmanuel, thank you so much for joining me today. I really appreciate it.